Welcome to making your home buying dream a reality. Hello, my name is Gabriel Pineda. I am a mortgage agent. I have over 25-year experience in the financial service industry. Retired professional baseball player. Now I'm working for NVR Mortgages, established in 1990. Who is this presentation for? First-time homebuyers, newcomers to Canada, investors, owners about to renew their mortgage, considering refinancing their home, wanting to take out an equity loan on existing property, planning to renovate their home, and also for self-employed individuals. What's my role? To help bridge the gap between where you are now and where you want to be, to educate you as to the different financing options available based on your unique situation, to show you ways of sourcing a down payment, to explain interest rates and the different types of mortgages, to know where the best mortgage rate can be found, to have the knowledge required to present a proposal for financing to lenders in the best way possible to successfully obtain mortgage financing. Benefits of working with me is because I work for you to find the best financing option for you. Access to many financing products, access to a large number of lenders like banks, credit unions, private lenders. I do all the shopping and comparison for you. We help to save on financing costs. Mortgage brokers today represent over 52% of all mortgage sales, including the sales within traditional lenders because of our experience and quality of service. When people have difficulty obtaining a mortgage through traditional means, for example, self-employed people, financial institutions are more willing to review the application if it comes from a broker versus direct contact. Let's talk about mortgages. What's involved when you buy a home? People use mortgages to assist in purchasing a home in combination with a down payment, or depending on the financing available. They may qualify to borrow the complete purchase price. A down payment is the amount of money that the buyer has to give to the seller in cash. The balance of the purchase price is made up of a mortgage. There are four typical purposes that mortgages are used for: purchase, refinance, equity takeout, bridge financing. What type of properties can be financed? Condos, townhomes, detached, semi-detached, and others. This is an easy process. Fill out pre-approval application. Submit required documentation. Get approved. Buy your home. How much do I need for a down payment? A down payment is the amount of money that buyers provides towards the purchase price of a property. Low-risk mortgages require a minimum 20% down payment. However, in today's housing market in Ontario, it is very difficult for new buyers to come up with a down payment for a low-risk mortgage. Mortgages with less than 20% down payment are considered high ratio and must be insured through the Canadian Mortgage and Housing Corporation. Effective February 15, 2016, the minimum down payment for the new insured mortgages increased from 5% to 10% for the purchase of a house priced above $500,000. Therefore, if the home costs $500,000 or less, you will need a minimum down payment of 5%. If the home costs more than $500,000, you will need a minimum of 5% down on the first $500,000 and 10% on the remainder. If the home costs $1 million or more, mortgage loan insurance is not available. For example, A property being purchased for $500,000 will require a minimum down payment of $25,000. This means 5% times 500,000. A property being purchased for $1 million will require a minimum down payment of $75,000. 5% on the first 500,000 plus 10% on the next 500,000. Down payment tip. The Canada Revenue Agency CRA offers the home buyers program that allows first-time buyers to use up to $35,000 on their RRSPs as a down payment without paying tax on the withdrawal. The amount withdrawn must be repaid within 15 years. First-time buyers purchasing a home jointly with a spouse or partner can withdraw up to $70,000 in total. The CRA defines a first-time buyer as an individual or individuals who has not owned a home that they occupy as a principal place of residence during the period beginning January 1st on the fourth year before the year of the withdrawal and ending 31 days before the withdrawal. For example, if you withdrew funds on March 31st, 2015, the 4-year period will have begun on January 1st, 2011 and will have ended on February 28, 2015. All more reasons to top up your RSPs. If a borrower already has a home, he or she may wish to refinance the property. Refinancing means to increase the size of the mortgage or renegotiate it in some fashion. If he or she decides to do this during the term of the mortgage, that person may have to pay a penalty to the lender for repaying the mortgage before the end of the mortgage contract, referred to as a term, unless the current mortgage is fully open. The refinanced mortgage will reflect the lender's current rate of interest, which may or may not be lower than the borrower's current rate. What is a bridge financing? Bridge financing is used when a person is selling their current home and buying a new home, and the home that is being sold has closing date after the home that they are purchasing is set to close. This results in a home owner temporarily owning two homes. The problem is that normally the down payment for the new purchase will be coming from the sale of the current home. Bridge financing is simply a second mortgage placed on the first home while waiting for it to sell. This money is used as a down payment on the new home. Once the first home sells, the mortgage is repaid. This provides a bridge between the two homes. What is equity takeout? ETO. An equity takeout is when a borrower increases the size of their mortgage or takes out a second mortgage or another debt against the property, such as a line of credit. An ETO is most often used to consolidate the higher interest rates debts, such as credit cards. In the case of paying off other debts on closing, the lawyer issues checks to the creditors being paid out from the proceeds. Borrowers may also take equity out of the property to purchase other assets, such as a boat or a cottage, or for any other reason as allowed by their lender. How does a mortgage look like? This is visual illustration of a mortgage. We have 5-year term, 25 years amortization. In the 5-year term, we have the present value and the term. Outstanding balance means the amount owing at a point in time, which becomes the present value for the next term. Over the next 20 years, the term and payments will not be the same as the original 5 years term. and we have the future value. After 25 years, the balance will be 0. Interest and principal portion of payments. A blend mortgage payment consists of interest and principal. The principal portion of the mortgage payment is partially repayment of the principal borrowed, while the interest portion is paid to compensate the lender for the loan. Using an example of 500,000 mortgage with a rate of 3% compounded semi-annual, amortized over 25 years with a 5-year term, consists of blend monthly payment. We can visually illustrate the makeup of the very first payment. As we can see, we have payment number 1. The interest rate of the payment is slightly more than the principal portion. Over the mix of interest and principal, we can see payment number 60 change, and the interest portion of the payment will decrease, as we can see. The mortgage. Types of mortgages. We will see benefits, risk, penalties. Fully open. Flexibility. Mortgage can be repaid at any time. Higher rate. No penalties. Partially open. Flexibility. Mortgage can be repaid at any time. Higher rate. 3 months worth of interest rate. Closed. It does not allow for full prepayment at any time during the term of a mortgage except by sale of the property. Repayment options. Periodic payment increase. This option allows the borrower to increase his or her payment, in many cases up to 100% of the original payment amount. Accelerated mortgage payment. This option allows the borrower to increase his or her mortgage payment before the first payment begins. Extended amortization. This option allows the mortgage to be amortized for a period longer than 25 years. For example, borrower might qualify for an extended amortization of 30 years. Mortgage options. Cashback option. The borrower receives an amount of cash on closing. Higher rate of interest on the mortgage. Bundle options. Combined or bundle includes a standard mortgage along with another type of debt, such as a line of credit. Portability options. Allows the current homeowners to effectively take his or her current mortgage to his or her new home. Under a typical scenario, the borrower will be selling the current home and purchase a new home. Assumability option allows a purchaser to assume or take over the current homeowner's debts on the property begin purchase. What documents are required to apply for a mortgage pre-approval? For employed individuals, T4, pay stubs, notice of assessment, letter of employment, tax return, ID, PIPERA. If applicable, separation agreement or divorce, child support order or agreement. For self-employed individuals, financial statements, business license, business check, tax return, ID, PIPERA, divorce or separation agreement, child support order, agreement if applicable. Documentation required for a purchase and sale agreement, listing, proof of down payment, rental letter if applicable, real estate salesperson information. Documentation required for refinance, equity takeout and switch, current mortgage statement, charge or mortgage, transfer deed, property tax statement, property insurance policy, mortgage repayment history. if applicable. How do you come up with a down payment if you haven't saved up for it? RRSPs through the homebuyer program, family loans, gifts, line of credit, or other type of financing. Save for it. Cut back on expenses. You'd be surprised how much you can save by cutting back on unnecessary expenses. It all comes down to priorities. Start with a budget. If you need help, seek the help of the certified financial planner. Bad credit. Pay off debts, especially consumer debts, as soon as possible. Check your credit report, resolve any potential issues. No bankruptcy in the past 2 to 6 years. Minimum 2 years after being discharged. Newcomers to Canada. Permanent resident card, driver's license, at least 2 years of employment, proof of income tax returns, and or letter of employment. Protecting your investment. CMHC insurance. When a mortgage is high risk, under 20% down payment, the lender will require CMHC insurance. The cost of insurance is paid by the lender, but it's passed on to the buyer and usually worked into the total value of the amount borrowed. The approximate cost of what you'll have to pay in insurance for a high-risk mortgage is 5% down payment, premium on total loan around 4%, 20% down payment, premium on total loan around 2.4%. Mortgage creditor insurance. Two types. Number one is life insurance provided by the lending institution to the borrower. Number two, life insurance that the borrower takes out through a third party, mortgage protection plan, available through a mortgage broker. Post underwritten, so the medical investigation is done after death. Application process is quick and easy, designed to pay the lender upon death of the insured. Life insurance, two types. Number one, term life insurance, in force for a specific term. Number two, whole life insurance, in force for the life of the policyholder. It's more expensive. Purchased by buyer to pay beneficiaries in the event of death of the insured. Pre-underwritten, so medical questionnaire is done prior to approval, which may require a medical investigation. Longer process. Independent mortgage broker fees. How do mortgage agents get paid and what are the costs? Most of the time by financial institution by percentage. Sometimes by the buyer, set fee, approximately 1-2% of the total borrowing amount, depending on the situation. This information is given to you in advance. Interest rates. Interest rates vary. For current interest rates, please send me an email and I will be happy to send you the latest rates at gpineda.nvr@gmail.com. Booking a private consultation. Still having questions? In order for me to serve you better and take into consideration all of the factors regarding your specific situation, it will be best for us to book a one-on-one consultation at no obligation or cost to you, so we can develop a strategy for your home buying needs. It will be my pleasure to work for you. Please click on the link below this video to book your one-on-one consultation. Thank you very much. My name is Gabriel Pineda.